do a comparison between the direct write-off method and the allowance method. So just as a reminder, go back to slide number 6 to review the difference between the direct write-off method and the allowance method. But for right now, I just want to show you what does it look like to do the journal entry between the two, okay? All right, so here we are again. If you're following along, this is part of your handout. So we are now on example number 3. All right, sorry, let me erase this. Okay. So on December 31st, it's asking us to journalize the entry to record the write-off, assuming the direct write-off method is used and B, the allowance method is used. All right, so let's start off with first the direct write-off method. So remember, the direct write-off method is for smaller companies with few receivables. Okay. All right, so let's do that. So on 12/31, Creative Solutions Company, a computer consulting firm, has decided to write off $11,750 balance of an account owed by a customer, Will Treadwell. All right, so what that looks like is a debit to bad debt expense in the amount of the $11,750, and then a credit to accounts receivable, $11,750. Okay. Now under the allowance method, what that looks like for us is, so the allowance method. So remember, we are this is for large companies with many receivables, and it's required under GAAP, right? So remember, under the allowance method, it requires an adjusting entry, right? That's done at the end of the year. So we're assuming that the adjusting entry was already completed. Okay, so what we're just now going to capture is us actually writing it off. And what that looks like on 12/31 is a debit to allowance for doubtful accounts in the amount of $11,750 and a credit to accounts receivable. So what you should take here is, when you're doing the allowance method, under the allowance method, you're always using the allowance for doubtful account, okay? However, under the direct write-off method, there is no allowance for doubtful account under the direct write-off method, okay? Also, under the allowance method, you do not use the bad debt expense to write off, bad debt expense account to write off anything. You use that only for estimating or doing the adjustment entry at the end of the period, okay? All right.